Hello everyone, welcome back to Upside Down Data. Today I want to introduce a new risk indicator that we just launched for VeChain and its native token VET. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you've been following the channel, you've seen us launch a number of different indicators in the past, so you're probably familiar with these types of graphs. But in brief, what I'm showing you here is the price of VET over here on the y-axis, and I'm showing you then the price action of VET over time. So x-axis being time, each dot is a day, and the color of each dot corresponds to the output of our risk indicator, the UDPI, or the upside downside potential indicator, which is what we call our risk indicator here. And the way you can read the output is that a score of 5 suggests high risk. That's when the upside potential is quite small and the downside potential is quite large. And a score of -5 would be the opposite. So that would be low risk. That's when the upside potential seems to be outweighing the downside potential. So what you can see is that if we look at the model's performance over the price history of VET, it's done a pretty good job of identifying these low risk zones here, where historically one would have been doing well to have been acquiring VET during these points. And it's also good at identifying these high risk zones, these points where historically it might be advantageous to have been exiting the market. Kind of tends to precede these downturns in price action that we see here. And so really with VET, we can see it does a pretty good job. It identifies the COVID crash, the pandemic crash in March of 2020 as being a pretty low risk zone. And then sure enough, we had a quite sizable rally coming out of that low point. I think this is about a 10x move here. And then we had an even larger move coming from around November of 2020 up into the spring, going from about 10 cents all the way up to around 25 cents or so. So a pretty large, or excuse me, from 1 cent up to about 25 cents. So that would be about a 20 to 25x move that VET put in between November and the spring. And then again, it identified the summer as being a pretty good time to be acquiring VET. And then sure enough, we had this rally off of around 8 to 6 cents, somewhere in that ballpark here, going all the way up to around 15 cents. And then we just actually had another little correction. Then we had another nice little 2x move about coming out of the end of September. And so overall, it seems like the upside downside potential indicator has done a pretty good idea of catching these high points, these tops, as well as these low points, these bottoms. So another way that we can look at this model is, instead of graphing the price history and then color coding the price, the days to the output of the model, we can just look directly at the output of the model. So that's what I'm showing you here. So on the y-axis, I just have the UDPI graphed, so 5 being high risk, -5 low risk. And then what we can see is that, similar to what we saw on the price action chart, you can see that the UDPI really bottoms out at these low risk zones. So for example, the March 2020 correction, where VET went way down and then had a big bounce off of that. It really bottoms out there. Bottoms out here in around November of 2020 as well. That preceded that massive rally into the spring. Then it really crashes down into the summer, where again we had that nice bounce around a 2.5x move that we did here coming into September. And then we had that correction in September, and now we're prices starting to rise back up again. So something I wanted to note about this chart, which I think this visualizes it quite well, is one thing that you can watch for with this indicator, especially when you're coming off of a correction. So for example, when VET has gotten a little bit overheated and is kind of correcting, what you'll see is that like, let's take for example the correction off of the spring. You'll see that the UDPI is really crashing here, right? You see that the slope of this line is incredibly steep. We're really just crashing off of that top that we put in the spring, and we're really coming back down. And one thing that's useful to look for when you see the UDPI acting this way, at least historically speaking, something that seems to be useful to watch for, is these reversal points. So, for example, in the COVID crash, we get this reversal point here, and that actually indicated, in that case, that the bottom was already in we're about to put in this big move. We saw a similar thing here, and we kind of bottomed out in around October, November of 2020, where again we see this kind of reversal, another little mini reversal here, and that kind of signaled that we had pretty much put in the bottom at that point, and then there was a lot more upside that was about to emerge after that. And then similarly in the summer, we see that kind of once we started getting these reversals, the price kind of hung out in the same general region down here, with it ultimately bottoming out over here in July. But it was kind of that same 8 to 6 cents range. And then we had that nice 2 to 2.5x, depending on exactly when one might have acquired VET in that window up here into September. And so both for tops when you see these reversals and for bottoms when you see these reversals, that seems to be kind of an important thing to look at with this indicator. So not only is this indicator giving us a general sense of risk at a given moment, but it's also potentially useful to kind of get a general sense of when the bottom might be in. These reversals don't always perfectly coincide with the exact bottom, but they tend, at least in the history of VeChain, and also with other assets that we've looked at, just looking at these charts, they tend to be pretty close to when we see these bottoms, or when the bottom's in. And so looking for those reversals in the action, not just the number, but looking at how it's behaving. Is it showing a reversal, or is it still just plummeting downwards? Can be a useful sign just to get a little bit more idea potentially about when the bottom could theoretically potentially be in for that indicator. So it's again not always perfect. It might take a few more weeks for that to happen, or even a month, but it's generally been pretty close. And so you can start really paying attention when you see these reversals, because it might suggest that we're seeing kind of a change in the price action soon, and that it might, if it's going this way, it might suggest that we're about to see a correction to the downside. This way might suggest that we have a decent setup for a move to the upside in the not too distant future. So again, don't take that to the bank. None of this is financial advice. Make your own decisions. But just something I've noticed as I've looked at these indicators, both in this case for VET, but then also for other assets we put out UDPIs for, that looking for these reversals can sometimes give a little bit of information about where we potentially are in the market. So speaking of where we currently are, to talk a little bit more about where we stand right now for VET and what the UDPI suggests for it, it suggests that right now we're in a point where the upside potential does seem to be larger than the downside potential according to the model. So it's thinking that VET has further to run to the upside potentially than it would to fall to the downside. And so the risk-reward ratio seems to be favorable right now for VeChain. It seems like it's more likely to be able to put more work into the upside than it's going to be able to fall, is what this model is suggesting. And so in the current moment, it's certainly not in a historically fantastic time to be acquiring, like we saw in those deep kind of green zones that we saw. The COVID correction in November of 2020, and then in the summer we just had being the kind of those 3 zones that VET's had in its history. But it's also not in these scary high risk zones that we've seen before either. And so it's overall the odds seem to be kind of stacked a little bit in the favor. The risk reward ratio is a little bit more favorable than unfavorable right now. So something that we talk about a lot on this channel, I'll just mention again here, is the idea that having these indicators for one asset is useful. It's good. It's useful to know, just if I were to buy this asset right now, like what's the risk reward ratio theoretically right now. But it's also useful in that if you have a bunch of different UDPI indicators to look at for different assets, and not just VeChain, but a bunch of different assets across this crypto space, what you can do then is compare them. You can say, okay, VET is sitting at negative 0.77, but what are some of the other assets sitting at right now? Are there other ones potentially offering better risk-reward ratios in VeChain, or are there other ones that are a little overheated and I might want to avoid in the current moment? And so that can help you really kind of get a sense of where the market is, which assets might be kind of in a better position to put in moves to the upside in the upcoming future versus ones that might still need more time to consolidate, or potentially their price might need to correct down a little bit more before they can put in moves to the upside. And so that's one really useful thing about having multiple of these models. And then once you get into situations where the asset has run, so let's say you had invested in VET, it goes and puts in a big move, gets over these riskier levels. What you could do then is start taking profits out of VET as it's making that move to the upside, and then start putting those profits into one of the assets that's at a lower risk level. And then if that other asset, the lower risk one, hadn't put its move in yet, then putting profits into it might mean that you can catch its move as well, and you can really compound those profits. So again, none of this is financial advice. Form your own strategies, form your own opinions. But that's just one thing that we think about when we're looking at these different risk indicators, and one thing we think about the information that they're providing. All right, well, thanks for checking out the content. Remember that if you liked the video, please give it a like. Subscribe to the channel to keep apprised of the new indicators we put out and updates of assets we've already launched indicators for. And also give us a follow on Twitter, where we give regular updates about our risk indicators and more. And just remember, with the UDPI, we're all going to make it.